Investing in the S&P 500 means you're putting your money into 500 big U.S. companies all at once. This spreads your money across many companies and reduces the risk of relying on just one company. The S&P 500 includes companies from many different industries. This helps protect your investment if one industry struggles, making your money more secure with diverse holdings. Bigger companies have a bigger impact on the S&P 500's performance. Your investment will be more affected by big names like Apple, reflecting the performance of major companies. Many funds and ETFs follow the S&P 500 to match its performance. Using these funds allows you to invest in the index without picking individual stocks yourself. The S&P 500 has grown over time, even with short-term ups and downs. Holding your investment for the long term helps you benefit from its overall growth. The S&P 500 spreads your money across 500 companies. This reduces the risk of losing money from one company's poor performance, making your investment more stable. The index is updated to include the most important companies. This keeps your investment aligned with leading companies and ensures you're investing in today's top performers. The S&P 500 is used to see how the U.S. economy is doing. Checking its performance helps you understand market trends and provides a snapshot of economic health. You can invest in the S&P 500 through cheap index funds or ETFs. These low-cost options allow you to invest efficiently, saving on fees while gaining exposure to the index. The S&P 500 includes top companies like Google and Amazon. Investing here gives you a stake in major successful companies and access to industry leaders. You invest in the S&P 500 through funds, not directly in the index itself. Look for S&P 500 Index Fund or ETF to invest, as these funds track the index and include all 500 companies. The index has both growth companies and those that pay dividends. This mix helps your investment grow and earn income, offering potential for both appreciation and dividends. The S&P 500 updates to include new top companies and remove older ones. This keeps your investment current with market leaders, ensuring you're invested in the best performing companies. The S&P 500 is a common way to measure how well your investments are doing. Comparing your investment's performance to the S&P 500 helps you see how your investments stack up. The S&P 500 covers about 80% of the U.S. stock market. Investing in it gives you broad market exposure, covering a large portion of the U.S. economy without needing to pick individual stocks.